Hi there, welcome to Grain TV. It's Thursday, June 2nd, and what a day it was for soybeans. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, beans up 44, well above $11 after approaching $11 yesterday. Wheat gained 9.25, and corn not able to hold on to the gains, closing the day unchanged. Let's start first with the EIA report out of on ethanol, and that was somewhat supportive, although obviously on the end of the day we weren't able to hold the gains. But production of ethanol was up 14,000 barrels a day, and stocks were lower by 44,000 barrels. So overall, that was at least some positive indication of corn demand. Other news out of EIA, the weekly crude stocks number was a little bit disappointing in terms of inventories. Inventories were off 1.4 million barrels versus about 2.5 million barrel cut that was expected. So that was disappointing, but oil actually got a stimulus from a big drop in gasoline stocks that were off about 1.5 million barrels versus only about a tenth of a million barrels that were expected to be cut. So overall, oil still has some positive stimulus. Keep your eyes on Vienna and what's going on with the OPEC meeting there. Not much expected, but you never know what could happen. And with crude trading around $50 a barrel, there are many pundits that are suggesting that we're going to be flatlined around this mark for some time. Let's switch gears now and talk about the agricultural sector. First of all, let's talk about weather. There have been some talks about drier weather in June, although those forecasts are still pretty far out and still fairly unclear as to what's going to happen. But when we look at the drought monitor today, it's not showing any sort of alarming pattern. Certainly, there's a lot of wetness in the Delta and in the plains, but there are some mildly patchy dry spots in the western Corn Belt, but nothing to be too alarmed about. When we look at the Climate Prediction Center's long-term outlook for June, it shows no real problems on the horizon, at least in the heart of the grain belt. So that overall continues to suggest that this crop is going to be a good one, at least as we get into maybe July 4th holiday. But the bean market continues to be climbing higher. We've talked about this bean scenario where if we got through $11, which we did on the close yesterday, then it was a quick trip potentially to $12. And we saw that today with the market really trading higher pretty much from the start of today's morning session all the way until we got to the close around 11:44 on the close. So we are nearly to that $12 mark. As we've said, we don't spend much time in that $11 zone. We spend a lot of time between $9 and $11, and then we also spend quite a bit of time between 12 and 14. But 11 to 12 is a very slippery slope, and that's what it's proving to be already. One of the things that concerns me as we get into wheat harvest is the burdening supplies that we have of wheat. We talked about last week, Kansas's wheat crop is looking very good. Trade associations there are expecting a 400 million bushel crop versus USDA's 350 million bushel crop. So, when we look at stocks relative to use in the wheat market, the problem we're running into is we are carrying nearly half a year's supply in carryout. So this year's old crop, which is nearly in the books, we're just wrapping up the old crop situation. We had really poor exports, and the USDA continued to ratchet down those exports, and will need to again when we close the book on 2015-16. So our carryout will be over 50% of a year's worth of use for old crop, and in new crop they are penciling in slightly less than 50%, only because they're looking for a big recovery in exports. The problem we have is we are not competitive in the world market. We see our prices well above France, well above the Ukraine, and we're seeing just really only ordinary business coming to U.S. shores, namely Japan and some Asian markets, but overall we're not getting any sort of competitive deals. When we look at the level of stocks to use in corn and in wheat, this is parallel to what we saw in 2009, and that year we had 450 wheat prices and 350 corn. So I'm really concerned as we get into wheat harvest. We already have a lot of old crop wheat that's hanging around, and we're going to add on to that another big crop, and my concern is that's going to drag down corn as well. Right now we had the wheat market move 10 cents higher today. Corn was flat. that widened that spread between wheat and corn to about 80 cents. I wouldn't be surprised that spread to really start to come down, and I think wheat eventually has to take out sort of these long-term lows. We've been trading around that 450 mark on July Chicago wheat. So look for that as a potential point where we may need to see prices come down, although right now it's being supported overall by the strong momentum in soybeans. That's all we got for today. As always, if you're looking for assistance in your grain marketing situation and you're looking to take some positions in the futures and options market, visit us online at grainhedge.com to see how we can help you in your own grain marketing situation. As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.